enthusiastic opening bell here this morning. A lot of ladies up on the podium. Love to see it. You love to see it. If you take a look at what's going on in stocks here today, so it's sort of going to be, I don't know, perhaps a photo finish for the NASDAQ today. You can see, of course, what it did yesterday, that biggest drop since September of 2020, that 4% pullback. And it was sort of bouncing between gains and losses when it came to the futures here this morning, in part because of Alphabet's drag. With those shares trading lower. Spotify not helping matters either, by the way. So I think I said sort of towards the beginning of this earnings season, when you really get into the meat of earnings season, you tend to see not as much action on the index level and more action on the individual stock level. That wasn't true yesterday, of course, but we'll see if it ends up being a little bit true here today as we look at some more individual movers. And speaking of individual movers, what are we doing? General Motors next, I believe?
T-Mobile. I think we're doing T-Mobile. Let's do T-Mobile. I was looking for areas here, Julie, to poke holes in this quarter. I can't really find them. Ever since they merged with Sprint a couple years ago now, it has been a pretty consistent beat and raise story by T-Mobile. By that, I mean they report their earnings, they beat on sales, beat on earnings, come out here and raise their guidance. And that's exactly what we're seeing here from T-Mobile. They raised their synergy guidance for the full year. That is how much synergies they can extract from that ongoing integration of Sprint to $5.2 to $5.4 billion for this year. That's a big number. They also beat by about a little over 9,000 in terms of the new phone customers they gained in the quarter. So that was good as well. They also beat in a couple other areas. But, if anything, Julie, you may now be at a point where you have to wonder, if you own T-Mobile stock, how much better can it get? Is this the peak? Just looking at some Yahoo Finance Plus data on T-Mobile, it trades at about 48 times forward earnings, at about 12 times trailing EBITDA. What does that mean? You have a stock priced for perfection in a market that is looking to get more volatile. Of course, T-Mobile has a lot of debt on its balance sheet because of that Sprint acquisition at a time of higher interest rates. So you have to wonder, is this peak T-Mobile? It's a question worth considering.
Well, and especially, you can ask that question, but at the same time, it looks better than its competitors from a stock perspective. So there's also that relative value as well versus the other choices that are out there within telecom.